Hello everyone, welcome back to Fundrise Finance. I hope everyone had a wonderful Thanksgiving and had a good time with their friends and families and are looking forward to amazing sales and deals that come during this part of the year. In today's video, I wanted to go over one of my favorite income generating ETFs, that is JEPQ from JP Morgan. It has been just over 6 months since this fund has launched, and we'll see how this fund has done in this duration and compare it against its peers and also see how it has been gaining popularity over the last 6 months. Let's check it out. I really liked JEPQ since it's launched in May of 2022. That's more than 6 months ago. I made quite a few videos in the past detailing how I really liked the structure of this ETF and how it will give a good fight to its peers like UILD and NUSI. When we look further into this ETF, we can see that it has currently assets of $870 million. And when we look at fund flows into this ETF since inception, we can see it started slow, but slowly it's gained popularity, and we can see more and more flows coming into this ETF every month. That's because the Nasdaq 100, on which this ETF is based, has been very, very volatile this year and was down more than 35% through mid-October. From then until now, we see a good rally in the market of almost 10%. And such choppy markets are where covered call ETFs thrive. They get better option premiums, we generate more income. And that is what we see in a 30-day yield of almost 20%. But the option premiums are not the only way this ETF generates income. JEPQ has a two-pronged approach. One, it relies on its underlying equity portfolio, which has a carefully curated collection of stocks that belongs to the Nasdaq 100, and also the options overlay, which generates or kicks in that extra income. So together, this underlying portfolio and the options, JEPQ is able to not only provide extra income, but also preserve the underlying capital and give that extra boost. And look at good ETFs like UYLD. It clearly mentions that it limits the upside potential. And with NUSI, though it promises downside risk protection, we never see that capitalizing. So what JEPQ does here is invest majority portion of its portfolio into Nasdaq 100, not completely though. It's just not like investing into the index. It selectively invests into stocks that are part of the Nasdaq 100, offering less volatility as compared to QYLD or NUSI, which completely invests into the Nasdaq 100 index and write calls on them. What you see here is comparison of JEPQ against QYLD and NUSI. I've also added QYLG, which invests 50% into Nasdaq 100 index and 50% covered call writings. I would say in similar frames as JEPQ. So let's see how it does. As we can see, it has been 143 trading days since JEPQ started on 4th May of 2022. Now, relatively speaking, JEPQ is down 8.5% since inception. When you compare that against the remaining three ETFs, we can see NUSI down almost 13%. Likewise, QILG similar, down 13%, and QILD down almost 14%. When I change the timeline to the last 30 trading days from mid of October, so when we saw that huge 10% rally, we can see JEPQ doing the best here also with returns of over 10% compared to QILG 9.5%, QILD just over 9%, and NUSI doing the worst here, returning just 1%. For the most part of 2021 and early 2022, everybody was on the bandwagon saying, hey, we should be combining QILD and NUSI to get the best protection in the markets. But that has not played out at all. Like we see here, if you are not able to capture the upside in the market and also not protect the downside in the market, then what are we investing for? Even when we compare these ETFs at expense wise, we can see JEPQ just charging 0.35%, while QILD 0.6% and NUSI 0.68%. And looking at QILD's performance since inception, that's way back in 2013, till now, this ETF is down almost 35%. For anybody who's investing into the markets, no matter what their end goal might be it for retirement or be it for future growth or whatever, capital protection is most important. But QILD never ever appreciates. So that's how the ETF is structured. QILG is down almost 13% since inception and also doesn't offer the same yield that JEPQ provides. If you like this video so far, I would really appreciate if you hit that like and subscribe buttons so that YouTube can spread this video to many more people out there and help this young channel. When you look at the dividend history for JEPQ, you can see it started slowly with 38 cents, then 41, 55. There's a dip in October. Then we saw a massive increase in the month of November. Where it paid 68 cents. Though the history is short, it was very promising For someone looking at a monthly payment out of their portfolio, maybe if you're in retirement, or even if you're not, if you need funds out of your portfolio to pay your bills or any other things, JEPQ seems to be a great option. So back in early July, when I posted my first video on JEPQ, when it was just 2 months into its existence, I knew with all these fundamental characteristics of low expense, the way the ETF is structured, the amount of dividend it generates, yes, though it's fluctuating, but still, I could see how JEPQ could do much, much better than QYLD or in USI or QYLG. And if JEPQ goes, how its elder sibling JP has done since inception, I have no doubts that JEPQ would be the choice of everyone who wants to invest into a Nasdaq 100 based income generating ETF. If you look at the fund flows into all the ETFs from start of 2022 till now, we can see JP in the top 10 with more than $11 billion. That's huge. If you look all other ETFs in this list, we can see only SEHD as being the other dividend-based ETF with more than $13.5 billion. Now, this is one of the best dividend ETFs out there. So JP also being on this list, this shows how important it has been for investors to see not only gains in their portfolios via stocks appreciation, but also to see their income generated gradually more and more every time. With the Feds continuing to raising rates and inflation being so high, I see no reason why the markets would stay non-volatile for the near future. As an average common investor out there in the market, it hurts to see the volatility. But that's where ETFs such as ZipQ come to the rescue. They thrive in volatile environments. And if not, they still generate gains because they're anyways investing into the market. So that has been my 6 month performance review for ZipQ. And so far, it looks very promising. And I hope it continues to deliver, irrespective of the markets being up or down or choppy. And if it does so, I'm very sure this ETF would see a massive inflows in 2023 and going forward. So that's all I have in this video for you all. Hope you liked it and found some value in it. Let me know in the comment section what you felt about it and what other ETFs you want me to cover in the future, and I will do my best to do it. Thanks for watching. Until we meet in the next video, try to do as much as possible to be financially healthy. See ya.